All right, happy new day, folks. It is Saturday, February 11th, and I'm going to be doing a review of the trading week that began Sunday, February 5th, ending Friday, February 10th. And I will also be doing an outlook of the trading week beginning Sunday, February 12th, ending Friday, February 17th. And of course, as always, this is not financial advice. Just going to be speaking about things from my perspective and from the experience that I've gained by studying these markets for officially now over 2 years. So I've begun my third year of my journey and plan on this being a lifelong one. So just to get things started, of course, economic calendar, which you're seeing here, just from that, right, Sunday, February 5th to Friday, February 10th, the trading week. You see that there was no high impact news for the United States dollar on Monday. We got that interview that the Fed chair had on Tuesday, which was why I ended up doing an update to my outlook because I post these typically every Saturday for the past week and then, looking ahead to the upcoming week. And so after Tuesday, after this event happened, it pretty much shifted my whole outlook, right, for the whole week. And that's what'll happen. I mentioned that in my last video that high impact news events and real world events can cause a sentiment change in the market. And in that case, you have to be ready to pivot and adapt with what's actually going on. You want to be fully submersed in this industry if you plan on being full time at it one day. But then, as you can see, Wednesday we had another Federal Reserve member speaking, right? FOMC, Federal Open Market Committee. So, and he's another member there. He was speaking. Let me actually just confirm that's what that means. Yeah, Federal Open Market Committee. All right. So that's what FOMC stands for. It's like a little tongue twister. I usually just say Fed, right? But I want to definitely know what all of the acronyms and stuff like that stand for eventually without having to go and double check. But some medium impact news going into Thursday, medium impact news, unemployment claims. And then on Friday, we had high impact and medium impact as well. So I was saying there was a potential week of busyness, right? And so let's go and look at, well, actually, I want to play this clip really quick too, from my last video, just because when we get to the part here, when I'm actually going through NASDAQ, I want you to be able to just have the appreciation and I want myself to have the appreciation of this, how on point I was with this, and hopefully come up with a better system for myself to be able to better take advantage of these types of situations. Because although I did update this on Tuesday, like in like the afternoon, it's very easy to forget based off of price fluctuations and things like that. There's a psychological aspect to this, right, in which you have to really get that part down pat as well, outside of fundamental technical and sentimental analysis. Definitely got to get the analysis of self right down so that you can fully be able to take advantage of the other aspects of analyzing the markets that are utilized to be able to have consistent profitability. But so let me just play the clip real quick. In this low, but still right now for NASDAQ, at least the low of the week has been printed on Monday. And to me, that just means that if we don't take out this low, I'll feel confident going into tomorrow and the rest of the week, possibly trading higher with this as a low of the week in mind. But also just keeping in mind that this is a very strong resistance, as well as potentially if we can get up to here, which would just be taking out this high. If we can get up there and then get back into this range, possibly for the rest of the week, I'll be looking for at least to take out this low and possibly trade back to the low of that daily inefficiency, and even back to December's high, which if we get back inside of that, we're trading back inside that December range, and all of the inefficiency that was left down there then becomes, targets for me, right? So that's why I'm all right. So I just, like I said, I just want to play that clip just so that for myself and for the viewers to get an understanding of this being real-time price, action occurring here and prior to it reaching up to that level. And then when I go into the charts, again, this was on Tuesday, we'll see, what transpired as far as price action is concerned. But now, so getting to the charts, right? Let's do that. Want to start with, and I'll do just a little brief, right? Breeze through all of them. I was mentioning how I was going to stay away from Dow Jones. So you see how on the monthly chart, we were inside December's range in January. Now in February, we're inside January's range. So we're really squeezing real tight in a sense here on the monthly chart. So I'm expecting some larger candles coming soon, but I want to have a better read on that potential direction, right? Because if I'm wrong, in a sense, by jumping the gun and not having enough data to really frame something higher probability, I could end up looking for something like this potentially, right? A candle to expand higher and go make a new all-time high. But then we get something like this where it starts higher, but then sharply rejects, and I get a large down month like this. So while I don't have anything that's high probability, I'm okay with just, just watching this market and not really put my hands on it. The NASDAQ, again, I don't have the lows marked out. Obviously, if it starts to trade lower, I will start to identify key levels there. But again, my bias on this was bullish. We do see we've broken December's high, right? But look at how we've kind of rejected from whatever areas were up here on the little bit lower time frames. Maybe there's like areas of liquidity or inefficiency in which we rejected from, trade it back now to where we are technically on the monthly chart. If we're looking at, so December's high is officially on here, 12,339. And what they have pegged as the closing price is 12,346.25. So we're like sitting just above it by about 7.25 points. S&P, so we also trade above December's high, but this is clearly back within that range, right, on the monthly chart. Going back up to Dow, weekly chart. So not to forget that weekly fib potential for us to see lower prices, me targeting that November low for sure. Obviously December's low first, but then that November's low would also be a target for me if we were able to get below December's low. I don't think it would be much resistance between that 32,686 to about 32,000. I think that should be a breeze. But again, one of the new tools of analysis I've been introduced to is measuring the halfway point of wicks. And so I'll leave that to you, but I will have that level prepared and identified before, we start to see price get below many of these lows here on a weekly chart. I'll then have that level identified as a potential first target below December's low. NASDAQ. So here we are again. We got that December's high, right? You see how this week closed inside of last week. So we have an inside week, similar to how on the Dow Jones, I was talking about an inside month. Now we have an inside week. So this week traded within the high and low of last week. And if you actually look at the body closely, the body is even closed and opened within the body of last week's candle. But again, if we are to continue bullish, I am still looking at that 13,100 and a half level for my first target to the upside. But now that we've closed and officially have a swing high here on the weekly, then this high would be my first target, which comes in at 12,949.75. Weekly on S&P. So again, we're seeing a December high, how we traded above it last week, closing side. This week we opened down here, but we traded above it again, rejected, retested, right? This level of this midpoint of this wick and closed, same thing, bodies, right? The open and close within the open and close last week, as well as the whole candle itself within the high and the low of last week. And so again, though, same thing with this. Still bullish, right? Just from looking at structure, we made a higher high relative to this high, and then we still haven't created a lower low yet, right? And so I would love to ideally see a swing low printed for some energy to head higher, and swing low is just going to be something like this, where we got the high to the left and the high to the right are both higher. So I want to see something printed like this on a weekly chart to also give me some sort of confluence for higher prices, right? Daily chart. So looking at the Dow Jones, remember those blue dash lines are going to be halfway of the daily wicks here. White is at halfway of a weekly wick, which you obviously can't see because we're on a daily chart now, but you get the point. I also said that I was going to stay away from this market, and you can probably guess why. Very choppy, small bodies, large wicks here on a lot of these daily candles. This week we did start to get a little bit larger bodies, but look at the wicks still taking up a lot of space on the chart, doing a lot of damage, right? And so I actually want to start getting rid of some of these levels that I don't think are very important anymore, just because of the fact that it's very spotty price action in here in general. And because I'm going to stay away from this, I don't even want to utilize those zones or those levels in those zones because of the fact that it's just being very what I would call seek and destroy in these conditions. So not saying it's not possible to make money in these conditions, but for someone that's experienced, someone that has the mental capital, that's been trained to be able to deal with structure like this, because it can be very frustrating expecting to follow through and then quickly getting right rejected, possibly thinking reversal in a sense, but then also not getting a follow through, right? And then it just ultimately ranging out and then finally, right, giving a follow through, but then rejecting again. So very mentally taxing, I say right now, to be trying to trade the Dow Jones. Looking at NASDAQ. So as you can see, as far as that daily inefficiency was concerned, that we had closed below right here, right? And then we traded below Friday's low, got up inside of here. And this is what I was talking about in that last video, how we got up inside of here, right? Going to Tuesday, Powell spoke. We got some energy. We trade up into this daily volume balance again, right? Close off of it, but we're above that inefficiency at this point. But then we open lower with a gap going into Wednesday. We do trade up into that volume imbalance again, but then we end up rejecting, closing lower with an inside day, right? This day closed within the range of the day before. Then that next day we open, we trade higher, but then we reject, and you see how we close all the way down here after trading down to the low of that inefficiency. So at this point now, we work both sides of it. We traded up to the high, right, down through the middle, back up to the high, back through the middle, and then we touched the bottom, right, rejected off of that for the close. And then on Friday, we end up closing below that, but we also rejected off of this daily support level here. So a lot going on in here, still relatively low probability. That's why I'm going to be using the dollar chart as mostly my like barometer, and it's something that's very useful as far as understanding the concepts of risk on, risk off. So when the dollar chart is moving higher, that's going to be a risk off scenario where people aren't going to be too much buying stocks or commodities and things like that because they can get a nice return on their investment in the dollar. But when a dollar trading lower, there's going to be risk on scenarios where people will be investing in stocks and commodities and things like that, where they feel they can get a better return on their investment by taking on those assets, right? But just looking at the dollar chart from the monthly, we do see we had 4 consecutive down months. And then as we get into this month here, you see a monthly imbalance here, right? We trade into that and we're rejecting. We're now running higher, still below that January 2017 high. And so at least as far as the monthly is concerned, I'm looking to see how is price going to respond as far as a close relative to the January 2017 high. And then also taking into consideration just this whole range here in general, halfway of this wick too, how does price respond to those areas if it in fact gets there. Weekly chart, so you see a couple weekly swing lows that were broken, right? So when this one got broken, immediately use it as resistance, take us below that January 2017 high, get below this swing low, and then we get a nice right rejection. We start to engulf previous down close candles that got us there. And we're still, again, this past week, we trade above that January 2017 high, but we did close below it. daily perspective, seeing a lot of those daily inefficiencies and those daily swing lows, which were broken, and the reactions there, right? We hovered above this one as support. Well, look, first we broke this one and we found resistance immediately. Hover above this one for support, broke it, found some resistance there, right? Hovered a little bit around this one, consolidation, support, and resistance. Get that push down below this swing low and into this daily inefficiency. And then we rally back up through several of these levels that could have offered resistance but have not. And so with that in mind, that was why my bias for the US stock indices had to shift midweek, because of the fact that, number one, last week we traded down through a support level but into another one and then reacted very aggressively away from that, right? And so the levels I was looking at to give me some sort of resistance were not able to do so. And so because of that, I have to understand that this is an opportunity for me to sit on the sidelines and really gather more information before I find something that could be considered high probability, especially for like a higher time frame play, right? A swing play that I may hold for a couple days, a couple weeks, or something like that. But yeah, so and then we can go down to the hourly chart as well on the dollar. And just to get that weekly perspective. So you see weekly opened up here. I was talking about all of this. I believe in the last video, if I showed the dollar, but this was the hour when Powell spoke, traded lower, found support at this daily volume imbalance. I mean the daily fair value gap, right? Rally back up into this inefficiency on the hourly chart inside of this old daily fair value gap. Trade lower, close below. I believe this was one of those old daily swing lows, right? Resistance there, lower again, support again, resistance, right? And on Thursday, we actually break through that zone, but look at how long we stayed below it, right? So this was, in a sense, could have looked like we were finally going to get that aggressive push away from here and allowing for the US stock indices to then make those new highs. But you also just want to keep in mind, how long does it stay below an old low once it breaks out of it, or an old range? And then does it use it as resistance as well? In this case, it did stay below it long and it did not use it as resistance, got back above it and started back to seek, old highs. All right. And so we see how it closed on the week. We get up to very close back up into this inefficiency on the hourly chart, but don't quite get there, and then just basically roll over and close as a bullish week because we closed above the opening price, but just mostly, if you can tell here, sideways. So not a lot by way of confluence to support any long-term trend plays in the US stock indices. So now going back to the US stock indices. So again, we're here at NASDAQ on a daily chart. So we're seeing how we utilize those blue lines and the blue dash here as basically a range to play within, if you will, for the week. And then we eventually, like I said, tapped into the daily support, rejected off of it. So it ended up closing above December's high. So like I was saying, if we were able to get back in this range, I would then be looking for lower pricing and inefficiencies and things like that created in December. But because of the fact that we closed above and we did tap into a daily support level, I guess I can just jump into the outlook in a sense now without really going through the news just yet. But just short term, anticipating some sort of a bounce, right? We'd love to see some sort of a bounce. There's plenty of levels of potential resistance offered after last week's trading to see how it reacts there, to see if it wants to have any type of follow through back into December's range and start to, see how it reacts at some of these potential support levels within that. Going to the S&P. So this again was from my last week's videos, an area I was looking to get in for a buy. That was a very solid speculation, but the execution was poor. I was not able to capitalize off of that, but we did get a nice run. This was a target I was looking for. We actually were able to get above December's high. We're able to get above this old daily and weekly swing high, but not all the way up to that next daily midpoint of a wick. You see the volume imbalances in here. when we go to the smaller time frame, we'll get a little bit like crowded in a sense, but just know that that's what this is two daily volume imbalances once you see those overlaps. And then again, pretty much just respected December's high a couple times here, right, on the daily, get below this midpoint of this daily wick, this dash line here, through some old daily volume imbalances, and then we retest in the sense that midpoint of a weekly wick, which we had broken through on the end of January going to the beginning of February. And so you see how we reject all of that and close higher. But as far as the week is concerned, we did have a bearish close on the week, right? Remember that I was just showing you that the weekly chart was an inside week. And now going back to, well, and then we'll just look at real quick. I'll do the hourly and the 30-minute so that you can see how it was potential to make profit here, right? It had some nice ebbs and flows in a sense. This part got very manipulated. And then basically a very choppy day here, but still a down close day if you were to get in and not really have to monitor it. But then hopefully you had a target you were looking for to get out because we ran that high and the high of the week on Thursday before continuing lower and making new lows for the week. And then ultimately trading back above the weekly opening price to close as a up close week, but still a doji, right? And so that's the hourly. Then I'll show you the 30-minute, just because again, I was speaking about new week opening gap, how you want to have that acknowledged and marked up on a chart, so as a point of reference. So just notice how price was just very like magnetized to it all week. Even when we traded through it, the willingness to return back to it after taking out a high or a low, right? Or after even making a failure swing, we were just very attracted to that level for the most part. So you can really understand moving forward when you're not expecting any type of a major long-term trend to be established and the week opens up with a gap like this, you'll probably see price show willingness to trade back to it, even through it, plenty of times throughout that trading weekend. It's pretty much every single day during this week touched it or traded through it, right? But going back to the hourly chart and looking at NASDAQ, so all of these gray boxes again gonna be old daily volume imbalances. So we see how, right again, and some of this was in that Tuesday video, how we were just right support resistance all up in here. Powell speaks, we trade to the high end of that range, and now that clip that I showed at the beginning of the video, this it was on the 15-minute chart, but it was within this candle. Right, if you look at the timestamp on that as well, it was around like the 1400 and something, and the clock was actually ticking like it is now. But I was saying if it was able to get up here and show some sort of resistance, I would be looking forward to then trade back to the low end of that range and even to December's low. I mean, back to December's high and possibly back inside of that range. So we do see that we were able to trade below it, but ultimately we just pretty much something that I say is like we worked this level and then we're able to trade back above it as far as going into the close. So we closed back above December's high. So again, like I said, I'll be expecting some sort of a short-term bounce for now. Seeing how it responds at some of these highs to see if it has that willingness to come back down to this red line and possibly even dig below that and see if it wants to target some inefficiencies and old lows that rest below where the market is right now. And then just so the 30-minute, so you can also see, right, that new week opening gap marked up, and then just how like the ebb and flow was on the 30-minute. Same thing here, every day touched or traded through except for Friday, because by Thursday here, we had already, I guess, committed, in a sense, bearish for the week. We traded down to this low, which I was thinking could have possibly been a low of the week, but then going into Friday quickly, right, in London session, they took that out and then just pretty much had still a choppy day, but a bearish day nonetheless. So getting in somewhere, you know, in London session, you would have did pretty good for yourself, holding into the close. Going back to the hourly and then going on the S&P. So hourly chart, we see again that same thing, support, resistance all in here. Powell speaks, we trade up to December's high, find resistance, right? Can't get above that, trade back down to the weekly opening, dip below it a little bit, rally on Thursday, failed to, you know, break above this structure here, and then slam lower making a new low of the week, trading back down to that midpoint of that weekly wick, even down to the daily volume imbalance before rejecting and closing within its range. And so again, same thing. Would like to see how it responds at all of these levels that were potential support or that were actual support during the week, and see if it actually uses them as resistance to then see lower prices. So obviously, we're going to be combining that with the economic calendar, and so I am going to go and look at that since I've kind of already, in a sense, given my outlook. And then we'll got one special treat for you guys as far as that psychological aspect, like I was mentioning, and then we'll end the video there. But then just on the 30-minute, the new week opening gap, same thing here. Every single day tested or traded through it, except for Friday, because again, we had already committed below these daily support levels and started to, in a sense, use them as resistance. So there was no reason to reutilize that. We did close bullish on this last day, but you get to see that it did make a new low of the week, a daily support level as well as a weekly support level, and then we trade back higher and close within its range, right? And so now pulling back up the economic calendar and going to next week, see what we have in store. So very exciting week. Monday, no high impact news on the US dollar. Tuesday, CPI. So this should be a huge data report coming out, which should, in my opinion, provide a nice swing that can be played for the next couple of days or weeks after this. And then it's also on Valentine's Day, so we'll see if it's a happy or a sad in a sense. And look, either way, I'm happy. I don't care if it goes up or down. I would just love to see some commitment one way or the other to then start to find some easier, high probability trades that I can hold from, possibly Tuesdays until like the close of the week if I'm able to catch the high or the low if it prints on Tuesday. But then Wednesday, more high impact news on the US dollar. Thursday, PPI, some more high impact news, and then Friday, pretty quiet. But so looking for a busy week, midweek next week. And now getting back to the charts to close this out. Like I said, the little treat that I have for you. So one of my partners, my mastermind partners, introduced me to this idea of using my charts as a journal. And the cool thing about this is with one of these tools, the call out tool, I'm able to mark up what I was thinking, where I was thinking it, what I did, right on the chart, like right on the candle, literally right on the candle I'm looking at the 1 minute chart here, so I can take a call out and place it on a 1 minute candle in which I made a transaction or I was having a certain thought or feeling or whatever, right? And so as good as I believe I am, and I'm always getting better with my skills of technical analysis and just identifying where the market is most likely to go. There's a lot of other factors that influence that. But at the end of the day, in a game of trading, and again, this is not financial advice, but to be able to make consistent money, you have to have the psychological aspect down, all right? And so one of the things that I'll admit is that that's an area of opportunity for me. I'm still growing in that area. I'm still trying to develop myself to be able to take full advantage of what I have my hands on here. But just to go through this really quick, if you can read what somebody say, right? This right here says sold here on the sell limit because of M15 structure, got stopped out minus 30 points. So that just means basically stopped out that I took a trade. I had a protective area where I placed for me to be taken out of the trade if it was going against the direction I thought it would, right? And so it was 30 points away from where I got in, ended up getting stopped out. So I take a loss there, right? But then because I guess out of frustration of me getting stopped out, and then like I said, the internal conflict, that battle inside that's going to happen as you're seeing the price fluctuate and you got money, fear, and greed, right, attached to those thoughts. I ended up thinking, okay, maybe it's going to keep going a little bit higher. So I ended up taking buys up here after my sale got stopped out, looking for price to trade about a good 20 points higher. I wanted to capitalize off of that push, in a sense, that follow through, and then I was going to hop in and sell. But what ends up happening is, as you can see here, it says first of many revenge buys. So like I said, it was already a trade that I took out of frustration. There was no real reasoning or sound logic behind it outside of the fact that I had just lost on the sell. So I wanted to profit off of a buy, right? But what happens there is I'm ended up buying, as you can see, it's a 1 minute chart at the high. All right, so I'm buying at the high before it starts to dip. And as you can see, it says first of many revenge buys. So as it's trading lower, I was still taking more buys. I believe I didn't take any more buys below here. And by the time it traded below this range, I was stopped out of these buys. And so now I have a loss from a sell because I got in here and it went here, and now I'm in buys, and I lose here, and I lose these buys because it goes from up here to down here, right? And then so if you're looking at the timestamp down at the bottom, this is like 4 a.m. Eastern time, right? So Central time at 3 o'clock, going to 4 o'clock. I'm tired. I'm going to sleep, right? But I wake up in the middle of the night. I see markets all the way down here now. So now I'm really upset because of my two thought processes. So if my sell didn't have a stop loss, I would have woke up deep in profit off of the sales. But then also, had I not been so uh frustrated and still just indicating signs of immaturity in my trading, I could have repositioned for the sales up here, right? And had a better entry than I had down here. And same thing, I would have woke up deep in profit. But instead, I've now taken two losses, all right? I'm feeling some type of way. So I wake up and I see it's all the way down here, and I'm like, okay, cool. So it really is gonna sell. I believe that my ultimate target was somewhere within this range, right? As far as where I saw getting to, like the lowest, I believe it's the lowest of that daily inefficiency I was telling you about. So you can go back through your own charts, right? And you can see what exactly that level was, but I know it's somewhere down here. And so I get into a sell here, and there is no stop loss on this. I'm in pain just 3 times now because I've lost here, and now I'm losing here. And so I'm losing my shit basically, right? And so eventually though it does get below my entry. I end up putting my stop loss at break even, meaning that protective stop, put it at a level of where I could no longer at least lose any money off of this trade. And you do see it traded lower, but then we start to, get choppy in here, and then we start to run higher again. So I get stopped out break even there. So now I have 1 loss, 2 loss, and then a break even trade, which in my mind is still technically a loss when again, whole premise was we're over here and I'm thinking down here. And I've made $0. I've actually lost money. Right. So my analysis in a sense was on point, but the trader in me was failing me just because of the frustration that he was dealing with and the recklessness that comes with that sometimes, which has to be overcome. You have to fight those demons yourself. Nobody else can do that for you. Definitely takes the experience of going through the pain, but also introspection and the willingness and desire to make the appropriate changes internally. Right. And that's why I said this is going to be some, extra on top, because a lot of people probably want make this to will make it to this part of the video, but this is like the real value in my opinion. But then again, so see, start to run higher after it stopped me out of that sell. We real choppy in here as we get into the equities opening at 9:30. And I actually throughout this had went back to sleep. I did notice I had at some point, obviously I woke up, I noticed I had got stopped out of the trade at break even. And then I'm possibly thinking, because again it's Friday too, like I'm not gonna do anything, just whatever. I'll take that L going into next week. I was already up for the week, so it wasn't like I was completely down in the sense of like I had a down week. But I mean, I had a down day, and this down day could have really made the week that I was already having like twice as good from these areas up here down to here. Very nice move. You know what I'm saying? We're talking about from, let's say, 450 to almost 250 down here, right? That's almost 2,000 pips that I missed out on. And not only did I miss out on the profit from that, I ended up losing. All right. So just being able to deal with losing is a struggle for sure, that I feel like if you want to be consistently profitable, you have to overcome that, because it'll lead you to do some reckless things. But then, like I said, so I was, pretty much just like half sleep. I wake up eventually though. I was looking at the 5 minute chart, and actually on this specific 1 minute candle is where I got in. But on the 5 minute chart, if you go back in this video and you look at the level that December high is at, this was sitting on that December high. And so because it was sitting on December high, going into, there was a news release coming out at 10 a.m. Eastern. So within the next few minutes, right, I got into a buy just thinking like, okay, it'll just quickly from there with the news release, run out this high that'll be able to make back the profit I lost, right? So basically, I risked an amount that would just get me back to break even as far as the loss I made, the two losses I had early in the morning. So that was what this was exactly. And if you read down here, I bought here because when I woke up, price on M5 was showing support on December 2022 high. I only wanted to trade to make back my losses from trading in London. And so this is again not a good reason to get into a trade. As you can see, I was facing pain again for a fourth time here because like I said, I got in a buy here. It's selling, right? So it for 2 minutes it bought, but then for another like 6, 7 or whatever, it's selling. And it's selling, I think at this point, as much as I wanted it to buy or even more. So I'm really just like, holy crap. Like, I want this week to be over, I want this day to be over. Like, what am I doing? Right. Um, and so eventually in my mind, I got lucky, right? Because again, if I saw anything down here as reason for a buy, and then, I would have been looking for buys down here, but I wasn't. And so because of the fact that, we did get a rejection, I mean, I see like an inefficiency down here, right? Just down closed candle that could have offered support, and it did, right? And then we finally started to push up trades up to here, which is where my exit was at, gets me out of the trade. Now I've made back my losses from trading early in the morning, and then I'm pretty much just watching going into end the day. Actually not even this market, well, this market and the S&P on the 1 minute chart. But yeah, we're just studying it after that point because, I guess I felt better, right? I made back my losses, and then I was ready for, like I said, the week to end for me to be able to then produce this video speaking about the review and then outlook going into next week. But yeah, I'm gonna end the video there though. For those who made it to the end, thanks for tapping in, and I hope you learned something today.